Now, one of the things that people make a mistake of when they're doing budgeting is they don't budget for profit. They usually budget for sales or they budget for expenses. So I'm just going to quickly explain to you why you've got to budget for profit. Remember, you're in business to make more what? Money. So the money, when you make money, it comes out of your business as what? Yeah, it comes out as... So when you're making money, it comes out of your business as profit. When you work in your business, the money you get is what? It's a wage. So when you work in your business and you pay yourself, you are getting a wage. You are a fixed expense. Does that make sense? So you should be here as a fixed expense, as an employee, and you should be here where you get profit. Now, in my business, I'm the CEO. I'm the CEO of Action Coach Corporate Australia. So I get a wage for being the CEO. I'm also a director, so I get a monthly director's fee that I get even if I'm not employed as the CEO. I'm also a shareholder, so I get dividends as well. So I could quit as the CEO and say, I'll stay on the board as a director. I still get my director's fee and I still get my dividends. Make sense? Yeah, question? Are you asking me what I pay myself per month? Probably more than you pay yourself for working. A director's, look, that's a director, like if you're going to get other directors, the way you look at it is this. If you're going to, and I suggest you do this, by the way, put a board of directors together, find some people that can come and sit on a quarterly board meeting, and then pay them for the day. So say to yourself, what would you have to pay a highly skilled individual that was going to come and sit in to your board meeting and advise you once a quarter? What would you pay them for that day? $1,000, $2,000, $5,000? You work it out. But that's what you should pay them. And you should do this. You should get a board of directors together once every 90 days, have a board meeting, go through your numbers, because I can tell you now, you are the worst boss you've ever had. True or true? Well, you want people that can add value. There's no real prerequisite. You find people that can add value on the board of directors. You don't want it to be all your best mates. You want it to be people, and you want to say to these people, at this board meeting, I want you to treat it as if you are a shareholder of this company and you are driving me to get the best possible results. Because this is how publicly listed companies work. That's why banks have so many ATMs and so little outlets. Because the board says, right, let's close all those down and make some more money. That's why the banks make $15 billion a year profit. Because the board of directors make that happen, not the CEO. I mean, the CEO gets paid handsomely for it. They're the one that just drives it. It's the board of directors that actually has the strategic direction over the company. And you should all have somebody else beside yourself helping you make decisions on a board, because otherwise, you let yourself get away with not doing stuff. And let's face it, if you weren't the owner and the employee, let's say that you worked for you, so to have an out-of-body experience for a minute, would you have sacked yourself by now? Yes? No? Would you be happy with the KPIs, with the performance of you? And for some of you, yes. For some of you, no. In fact, I'm seeing more of this than this, which is normal, right? Why? Because we live in this world of denial where we let ourselves get away with not doing stuff. True or true? But if you have a board of directors that you're going to meet with in 90 days' time that met 90 days ago and said, here's the strategic plan for this quarter, then you're going to be accountable to somebody. That's why coaching's so effective, because then you become accountable to somebody. When you do a 90-day plan, someone's checking in with you every week to make sure you're getting it done. That's why athletes have coaches, because truth be known, they don't want to get up at 3 a.m. and exercise. No one does. That is just stupid. Sleep is much better at that time in the morning. True? They need to be pushed. So we want to budget for profit. Now, the good thing about a business is sales always equals 100%. How much does it equal? 100%. Everybody, how much does it equal? That's it. There is no such thing as 110%. 2,000%. It doesn't exist. 100% is it, right? That's the beautiful. I know I sucked at maths at school, by the way. The only thing I was good at during maths was smoking under the maths building. That was about it. So you don't have to be good at maths to run a business. Sales is equal to 100%. You just got to decide then, okay, what percentage of that do I want to keep for myself as the owner? What would you like as an owner out of your business, percentage-wise? You'd like 100%? Okay. Not going to happen. Let's say you pick 10%. You say, I want 10% as a dividend at all times. So if it's doing 2 million a month, I want 200,000. If it's doing 2 million a year, I want 200,000 a year, whatever it might be. If we know sales is 100% and our profit is 10% that we want, what's that leave for us to pay for the cost of sales and fixed expenses? 90%. So our budgeting becomes real simple because our cost of sales will usually equal something that's fairly not going to move much depending on what we sell, but typically, well, let's say it's 50%. What have I got left to pay my fixed expenses with? 40%. So now I've got a budget that says I can allocate 40% to my fixed expenses. This is how you make decisions. Someone says, okay, you might go, I think I'd like to move to a nicer warehouse. Well, do your budget. And if it goes over the 40%, where's it going to come from? If it goes to 43%, where's the 3% going to come from? It's going to come from here, isn't it? That's going to reduce to 7% for a while. So that's a 30% reduction in the money you're getting paid as the owner, by the way. And what decisions do I make that affects it? And the good news is, if we reduce the cost of sales as well, let's say we reduce it 10% to 45%, where does the 5% go? Yeah, it goes down here, doesn't it? So we can make that 12%. Do you see how powerful it is to understand your numbers? Yet so many of you don't do this. You should sit down once a month and look through your P&L. Yep. Well, the cost of sale, so a service has to be delivered. Depends, yeah. If it's somebody that's on a set wage, yes. If it's a contract, it would be a cost of sale. Yeah. Yeah. So you can have cost of sale 0. That's possible. Your gross margin can be 100%. That is possible. Whatever your numbers are, though, you need to know them. You need to know what they are. I would always say aim for a minimum of 10% profit no matter what. There's no interest. I mean, there's lots of benchmarking done, but they're done on averages, and who wants to be average? I don't want to be average. I'd rather aim for better than that. To me, the more profit I can make, the better. And the good thing is, once you get over sort of $1 million a year, it gets a lot easier. There's a lot more money left over. It doesn't cost much more to run a $2 million business than a $1 million business. It doesn't cost much more to run a $5 million business than a $1 million business. You're sure there's more wages and things, but the infrastructure, the systems, they may be a little bit more robust, but they're not huge. Like doesn't go 5 times the cost. Your website doesn't increase by 5 times the cost. You know what I mean? So there are things that don't move the same. And I think this is the challenge. By knowing this, though, as you grow and there's more expenses, you can see what it does to your profit, because there is a sweet spot in every business, and everyone has to go through a bit of quicksand before they come out the other side as you grow a business. So you'll find you'll get to a point where usually under $1 million somewhere in a business, you'll be making good profit, and to go to the next step, you actually have to go through a loss before you make more money, typically, where there's a dip before there's a rise again. And this happens every time you grow a business. Because quite often you need more equipment, or you need bigger premises, or you need to hire more people, or you need to do more marketing, or something changes that affects your fixed expenses. But if you don't take that leap, you don't get the growth. Does that make sense? So you've got to invest that bit more. But I would always aim in my budget for at least 10% profit, because otherwise, what's the point? And really, you want your business to be returning you more than what a salary can, because that's the only way you can get a passive income, isn't it? You want to be able to, and you've got to be able to replace yourself at some point. Because if you're doing a job in the business, you want to be able to hire somebody else to do that job so you can do what? Whatever you like. That's what I love about, and I've got a good successful business. I can now move on and invest in other businesses that I don't have to work in. So just by financing them and getting them up and running, and straight away when we can afford to, like my online marketing company, me and my business partner have never worked in it. We hired a manager from day one. It's a great thing to be able to do, because then guess what? It never takes my time. In fact, most of the customers of that business wouldn't even know that I'm an owner, wouldn't even know who I am. Yes? KPIs. How do I know the business is working? KPI. So if you think about that dashboard, if I go back to that dashboard, we have, it's a fair way back, there we go. all your gauges need to be working. So every Monday, I get reports given to me, every Monday. And on those reports are what's called KPIs, key performance indicators, that are like the gauges on a dashboard that tell me what are the sales, how many inquiries did we get, what's our conversion rate, what's our average dollar sale, what's our cash flow position, everything I need to know is on that dashboard. And so I say, you've got to know your numbers. And I know this stuff is not sexy. This is the stuff that you all skip because you're on a shortcut to the marketing. True or true? But how important is it to know these things? Is it important? Yeah. So you've got to be able to do budget. You've got to be able to sit down and actually look at a budget and go, what do I need to do to actually extract some money out of this thing? Now, you might decide to make no profit. That's okay. If it's part of your plan because you're investing the money back in, then that's okay. When I moved 3 years ago from Gladesville to North Ryde, I knew I was going to double my rent straight away. I had to spend $450,000 of my own cash to fit out the office because it was difficult to get a loan. I just went, all right, we'll just put our own money in. Well, that had to come out of somewhere, had to be cash flowed. So, without cash flow forecasts and without budgets, we wouldn't, it would just be a mess. That's a lot of money. And the bigger the numbers get, the easier it is to go in the wrong direction as well. So you've got to make sure as you grow your business, you're on top of it. Okay, the next thing that this leads to then is understanding your break-even point. What is your break-even point? Anyone know what that means? What happens at the break-even point? You start to make a profit. Is it a good number to know? Hello? Of course it is. But how many of you know your break-even point? To the dollar. Who knows it? To the dollar. You would think if it's important to you to make money, wouldn't you know when you start making money? So once again, on this CD that we're about to give you, has also got a tool on there, this exact tool. You just put your numbers in and it will tell you at what point you start making money. Now, it's not going to work unless your books are up to date. So your profit and loss statement needs to be correct before you can put the numbers in here. So it's a priority. It's a priority that you get this stuff right because your business and your life depends on it. Not it would be nice, it depends on it. Depends on you knowing, because once you know at what point you actually turn a profit, everything you do can be driven to exceeding that number. Everything. You can incentivise salespeople to exceed that number and your staff, your team. You can set goals based on how much profit you want to make because you know what the number is. You know that you have to work hard until you get past that point. It can't be the goal because it's where we just break even, but you know at that point you start to make money. Now, for some of you, you can work it out by the hour. How many hours do I need to charge? Some of you, if you're in retail, will work out how many units do I need to move in a morning. I've worked with retail outlets where we've said, by 11 a.m, this is how many we need to have sold, and that's when we start making money. Per individual, they get targets to say, until you get to this X dollar, you're costing us money. So we can start to monitor individuals' performance and make decisions on them. Very powerful to know your break-even point. Very powerful. Final one then is your balance sheet. And this is the thing that you will look at on an annual basis. It's like the scorecard for the health of your business over a 1 year period. Now on your balance sheet are listed all the things that you own. They're called your assets, and there's two types of assets. There's liquid assets and long-term assets. Liquid assets are things like cash or stuff that you convert to cash very quickly. Long-term assets is stuff that's harder to convert to cash, like if you own a premises or equipment that you're leasing or something like that. Where the red section is what's called your liabilities. Same thing, there's short-term and long-term liabilities. So things that are going to be finished with quickly, like a current supplier invoice, or things like a loan on some equipment would be a long-term liability. And then the outcome is what's called equity. And what you want to see is your equity going up every single year. That's a healthy business. Now, when you come to sell, I know this is right now is not important today, but when you go to sell your business, I can guarantee you they're going to look at this report. So you need to understand what it means. Because you also need to be thinking about, what does my business look like when it's finished? And if I'm going to sell it, how am I going to make sure I get the maximum return on investment? Because sometimes most of the profit of a company is made on the day that you sell it. And there's nothing wrong with that either, by planning for that to happen. Once again, though, it's got to be a plan. It's got to be what you've planned to do. So, we're going to hand out some sheets now. So with the discounting versus increases prices. And then we've got the financial mastery calculator and the CD.